Hello, good evening traders. It's Mark here from the Day Trading Room. The time is 11:30 in the evening London time on Monday the 31st of January 2011. The last day of January, the first day of the week, and the next trading day following the very volatile crude oil day trading day on Friday. We had also had a reasonable down day on the Dow on Friday. The crude oil range actually was the largest range we'd had since June 2010, coming up to 462 cents, I believe. Today wasn't far off that, but just slightly lower. Volume was a little bit lower than Friday's action. Of course, it's the Middle East Egyptian news fueling the fire at the moment to the upside on oil. So I'm redoing this video because I've just been waffling on for 40 minutes about Friday and Monday's trades, and that's no good for reviewing, and that's no good for anybody watching either. That'll just send everybody, including myself, to sleep. So we're going to do a quick video today, a quick 15-minute video, and I'm going to run through trades very quickly, just without spending too long on any of them. Okay, let's start with today first, and then we'll go back to Friday's action. Today, I was looking at crude oil, and overnight, this is the. Let me get the right thing up for everybody to see. Okay, here we are. We'd pushed up on Friday, as we all know. We gapped up and opened up at about 11:15 London time, I think it is. Or was it 11 o'clock London time? I'm not so sure, on the Sunday evening, and then we push higher, and then we trade throughout the early hours of the morning. And I look to get involved around 2 p.m., half an hour before the Dow opens in the US. So the premise basically for me was there is going to be some sort of pullback, or there's going to be some sort of flush higher, one or the other. I don't know how I'm going to trade either, but that's the way I'm looking to take it. When I came to the desk this morning, I noticed that in the early hours of Monday morning, we had pushed higher to 90.80, and we then drifted off lower. So that really negated my premise of getting the blow off top to that high, and taking the short for a bit of a calming. So really, as soon as we opened, I thought perhaps it's time for us for a trace back into Friday's range, and then I'm going to look to either get the long off that level, or I'm going to look for the flush down towards that level. Market open, consolidated a bit here, drove down, we consolidated a little bit here. I'm now thinking, do I want to wait for the flush to go long, or do I think there's going to be a flush and I want to take the actual flush? I decided to take the actual flush, took a small short, came out into that good move. It was a good 20 cent, 25 cent flush, so a nice 30-cent trade, all in, all out, no messing around, because it's the first day back after a good day, because it's the last day of the month, because it's the first day of the week. All those things, slight little red flags in my eyes. I need to be careful, I need to be cautious, make sure I'm not getting overconfident after Friday's action, make sure I don't want to do anything stupid at the end of the month, make sure I don't want to start the week off on a bad note. So little trade there, just waiting for that opportunity. Usual thing, continuation type trade, push lower. We'd had some great support at the 89.20 overnight, great support even for several minutes early after 2 o'clock. Got the break, hardly any pullback, waited for that momentum to push again. You see how the volume died and pushed. Take the trade, we're straight out. Right, next goes the next trade. Then we started pushing higher. I decided to take this little short here, thinking, okay, we've pushed higher. I think there might be one more flush higher before perhaps a rotational move lower. I was half expecting this sort of action today, being a big trend day yesterday, but we did get that overnight, so we ended up being a trend day today. To the upside again, continued trend. Obviously the Middle East news hasn't changed. I took a short here, and I was stopped out for that 15 cents. The reason I took the short there, looking for the exhaustion again, the flush higher, good volume, it looked good enough to have a go. Started to push down, didn't give him any scale, took a stop on that. Never mind. And then looking again for another short. I still think this isn't a massive trend. I'm still waiting for that flush, and I hopefully get some sort of move back to the middle here. We've got a flush higher. Nice little candle on that, nice little tail on it, good volume. Took the short. It went against me, didn't quite stop me out. because my entry was actually pretty good on that candle. Didn't stop me out, started to rotate down. I ended up taking a 15-cent profit on that. So that cancelled out that bad trade. But I actually started thinking, you know what, you're fighting against the trend here. The trend is up, it's solid. Let's look for buys now. Wait for that strength to come in, or even wait if we can get a rotate down to here and then a buy. I'll take it for a push up. I was fighting against the trend, and it only dawned on me after this trade, that Duff trade and this trade where I only just got away with a 15-cent profit, that actually you're on the wrong end of the market. So moving on very quickly, loads of volume came in, and I mean loads relative to what we'd had for the last hour or so. Even the peak was only 1500, 2000, came straight in with a 4,500 bar volume. Three good bars, donk donk donk, waiting for that pullback. Two entries for me. I chased a little bit at 64, and then I bought again at 59. Now why did I do that? I chased with a small amount because I saw the volume come in, I saw the strength, I thought this may be news related. It's been a lot on the news recently about the Middle East crisis, what have you. So I know a lot of oil traders are looking at that. I know that if something came across the wires, I wasn't looking at the news myself, but if something came across the wires, this could rocket 100 cents. So let's just zoom in on that so we can see what's going on. I'm going to struggle to get in 15 minutes here, but let's move along very quickly. Yeah, I chased it at 64, bit of a rubbish fill, but I'm looking because I think there is something happening. So I'm in it, but I've got to be prepared. If I'm taking that move, I've got to be prepared to risk a fair amount. And I've also got to be prepared for it to pull back before driving on again. So what I did is I went in long at 64. We've got this little pullback here, only one candle, mind you, low volume. Then we started pushing immediately again. I then went, should I say, aggressively long at 59. Why did I go aggressively long at 59? Let's just run through that quickly. Got the three candles up. I'm looking to get on board, so I take a small scale. It's a little bit chasey, but I want to be part of it. Okay, my risk has got to be really right down here. That's why the position's got to be very small. It can't be it can't be a full size position with a 40 cent, 50 cent risk. Crazy. It's got to be a small position. Then we get the little pullback. Then once our risk is quantified, the bottom of that pullback, which in this case was here, we get the push. I can then become more aggressive because my risk becomes quantified. There's my risk point. That's a bit of a rubbish drawing, but you get the idea. The push up, the pullback. When you start to see that, there's the long. Where's your risk? It's here. When you're buying on this drive, your risk is down here because it could still pull back to here before driving on. Do you see? As soon as I know my risk is quantified, then I'm in heavy. I'm in heavily. Got the spike, great little spike, 22 cents, all out on that, holding the core position, got a push. I had actually had an order in at 91.10. Because I'm looking for that flush. I was looking for 91 to break. I was looking for them to panic a little bit, and you normally get a little run on to 91.10 to 91.20, 10 to 20 cent move, especially in this sort of volatility. It was working well on Friday. I thought I'd get that. We popped up to something like 91.03, 91.04, and then pulled straight back under 91. I was like, oh, I can't believe I've missed the flush by 4 or 5 cents. So I hit the market, got out. My average fill was 97.5. So yeah, but it's not quite as good as I'd liked on that, but still a great move nevertheless. Actually, it turned out it wasn't the flush, and we continued higher. Let's click the drawing off. Let's get the scales back onto normal. We continued higher. At this point now, I'm starting to think, okay, we've had two good days of move. We're up in the high 90s. We're above 91. It's about time for a short. I'm going to look for a flush, but I'm not just going to stand in the way of any old short. I am going to wait for a flush to get short on. Some sort of flush, some sort of signal. In this case, it was a double top. We pushed up here. That was a flush. Fine. And if you'd taken that short, you would have been rewarded quite nicely with that. But I waited and we got this double top. It pushed higher only by a few cents. It was worth a go to me. I took the short. What was the high on that? 91.8. I think it was low 70s. Not too bad. But we pushed down very nicely. And I got a nice 25 cent trade on that flush. By then I'm thinking, you know what? If we push higher, you've got to look for longs because running into the close now, I've got about an hour left. Don't go fighting the trend. So that was okay. Sneaky, got away with it. Here's what I'm looking for here. Looking for a buy around this level. only because that's the first point that the oil would have been pulling back to an oversold condition on 3 minute. You know, that's one of the trades I like to take: cycle up, pull back, take the long. So that was about the area. Didn't quite make it, so I didn't get filled. No trade for me there. No big deal. It's not the end of the world. It happens. So let's run through very quickly the one ES scalp today. The reason I used the ES was only because I was using a limit. It was a bit of a speculative limit. I was in at 4 3/4. Just saw this volume coming in, ticks pulling down to a new low. That candle, I just thought it was a range bound trade at the time. Stuck an order in at 4 3/4 when the price was at 74. Pull back up, just pinged me, lovely bit of luck. Then rocked back down again, took 1 1/4 points off that. Nothing big, just a little scalp. 10 minutes into the film. Right, let's get on with YM trades from yesterday. I did put these on the blog, so I'll talk a little bit more about these. Let's get the scaling in. I don't want to talk about feel too much because you sound like a bit of an idiot when you start talking about traders feel, but I've been doing it nearly 10 years. It'll be 10 years in March, and you do start to get a bit of a feel for when things aren't quite the normal trade. And when they're not quite the normal trade, i.e. rotating up and down and probing highs, probing lows, you can start to think of some sort of abnormal movement, which is normally increased volatility, increased range, increased trend type day. So when I get that and I think I'm on the end of something, I will look to hold the position, especially now as I've started to focus more on oil as well as the Dow. I can afford to, if I think I've got a trade to hold for a larger target, I'll look to keep some of that on. And that's what we got here. We've got a really good push lower, no pullbacks, which is what I thought, okay, great. This is setting up my classical tick pullback to zero trade. Little bear flag, pull back, ticks pull back to zero. I'm taking the short. I'm scaling out as we're driving down. Lovely trade for me. That lovely 30-cent trade. Looking to hold a very small portion of the trade. It's no risk to me now. I've taken off the majority. I've got a little tiny bit left. This went on much further than I expected. Actually, my scales were around here, or we pushed a lot lower before pulling back. But I held on to one part of the trade, and actually, let's bring this up so we can see a bit clearer. I held on to one part of the trade, and while I was focusing on oil to generate that scalping, profits for the account. Beautiful trade. This managed to get my 100 ticks. Literally, that's where I set the limit. Just 100 ticks. Thought great. I'm happy with that. And then I want to talk about this trade a little bit more deeply. Why did I go long here? Well, it just set up absolutely perfect for me. I'm looking after the end of a trend for a flush to take that reversion to the mean type trade. I've got two types of trades, as I've probably talked about before, two foundations: continuation trades, which are the pullbacks, the flags, the tick pullbacks, the 3-minute cycles, that sort of thing. And I've got the reversion to the mean type trades, which are the flushes, which are the volume spikes, when I'm looking for just to grab that little bit of panic for a pullback. Sometimes you won't get a lot of a pullback and it's a little bit of a quick scalp. Sometimes you can get a little deeper counter trend. So this was perfect for me. 5 p.m. window. I've talked about that before. That's why I've got these lines on my chart at the moment, because that tends to be a time where we can get a counter trend move or flush or some sort of change of direction. So that combined with one of the biggest volume bars of the day, that combined with the lowest tick reading of the day, that little red dot, you can't quite see it. Perfect. I'm going to go in on that. I'm going to go in heavy. I feel I'm at the end of the trend. I feel I can risk not too much on it, and I feel there's a little bit of mileage in that trade. Pushed up, nice 25-point move. Can't remember my entry precisely on that without looking back on my Friday notes. They've got in my week's file, unfortunately, but it's going to be a good 20-cent scale on that. Then the next scale was, the reason for the next scale was the overbought condition on the stochastics on the 3-minute. I always look for the 3-minute cycle, as I've talked about before, and I would look for the 3-minute cycle to get short on. So it makes sense for me to come out as soon as that went overbought, which was here. You can see here. I'll just going to run over the 15 minutes, but only by a bit. There's the overbought condition there. So there's no reason to hold the entry. I'm always be looking for a short normally. So let's just come all out of that. Beautiful little counter trend trade. Almost got that low tick, but there's no magic to it. It's literally because it's the 5 p.m. I put an arrow there. The flush on the ticks. and the end of the trade, good volume, everything's in your favour. Have a go. It's just getting rid of all the retail who are in too early. They're all in long. All the guys are buying long, thinking it's gone too far, and they're just timing's well off. They'll end up, if they're going in here thinking great, it still goes another 40 points against them, and most guys who are J trading, that's too much. So you get that capitulation, and we're just looking to take advantage of those guys. As harsh as it may sound, excuse me, knock my headset off. Harsh as it may sound, that's the deal. So did that. After I took that trade off, I thought to myself, you know what, I would normally be going short here. The counter trend, here it is, good move lower, oversold, one cycle up, there it is, there's the peak, looking for it to roll over. Would have been nice to have been up to the VWAP, but you can't have everything, so it's worth a little short. Small short for me, didn't want to overdo it, didn't want to give back the profits, especially after that nice 100 tick trailer. This is actually the second one of the month for me, a really good trailer. Pretty rare for me. I normally just love to take stuff off the table and look for the next trade. But as I've said, if you're actually actively making money in another market, you can afford to leave the market alone where you think you've got some sort of mileage in the trade. Before, I'd always think, okay, I'll come out and I'll try and get more aggressive with some more size and squeeze more out of it. And perhaps, when you trade more aggressively, you can, you maybe make more because you're focusing on the market, and you can be more aggressive with more size, looking for those pulses lower. But it's more relaxing. You hold the trade; it's not costing me anything. Nice, nice little move on that. Anyway, digressing. Back to the final trade of the day on that. That was the short counter trend move, looking for the move back to the oversold condition. All I got, and that's what I went for. I started to see the volume tailing off a bit. I started to see the ticks not being as cooperative. It wasn't going to drive to lows. It might have done later on in the day, but I was happy to take that all out for a nice 20-25 cent gain, something like that. Great. 15 minutes in. Oh dear. Let's get on to oil. Okay. I did put a post up about oil, and this is going to take me a few minutes to run through this, but it's a quite important thing. Let me just go through each trade individually, and anyone has any questions, anyone's looking at this, I'll be happy to answer them, by the way, if I'm running too quickly, but I don't want to bore everyone with these videos. Double top, nothing more than that. At that point in time, I was looking like a range bound trade. Poked through the high. We had that little trend move up, poked through the high, lower high, worth a go. There's my stop. And scaling out into that, great, just before the low, nice 3 scales, and you're out. Good little start to the day. Then I see the strength coming in. This is the time I'm starting to think, hang on, things aren't trading as not as normal as they would. This is good volume, this. 4,000 contracts is good volume. The Dow's going down, oil's going up. Hang on, this is a shift. This looks like a shift in proper money. So I'm starting to think, okay, great, I'm going to try and buy a pullback here. Little bit of a mistake on my first entry. I have talked about how oil is better to wait for that push because your risk is quantified, but I did take an entry here. It went against me a bit. Didn't stop me out because obviously my size has been reduced because of the increase in volatility. It's one thing you've got to do, reduce your size to allow for that increase in volatility. So there's my entry there. I'm adding to the position when I see the move back in my direction. Why do I do that? Repeating myself a little bit here. It's probably why my videos are so long and dull. It's that this is where the risk is quantified. So I'm waiting for that pullback. I wait for the move in my direction. There's my risk. It's quantified. When I'm just buying here, I'm just trying to scale in and look for that little sweet spot. But my risk is open-ended. You see that going against me a fair bit. A 15-cent adverse move. It's fine because I'm prepared for that. Obviously, if this had pushed up and then pushed low, I'd have been stopped out. But I'm waiting for that move, waiting for that trend, and waiting for that push up. Great. Scaled that out as we approached that high level there, and then I got a nice little scale as we just took out that high there. Great. Again, I was looking for the volume spike, just that sort of thing. That works well on oil, looking for those spikes. Okay, what else have we got? This was a little bit frustrating, I must say. Again, a counter trend move down. I'm not really looking for an entry as such, but if I see this pattern where it's a push lower that's immediately bought, I'm going to have a go. Why am I going to have a go? My risk is quantified. It's a great low risk trade. It's just flushed out a few little weak longs. It's got the potential to run on, and I was really looking for it to pop above that high. The market was so strong up till then, looking for that pop, looking for that flush, and when it flushes, you can get 20 extra cents in a few seconds, so it's worth waiting for that. I didn't. I got a great entry here. I took a great 20 cents off the table. It then approached that high. It just started to stall. I lost my bottle a little bit with it and took it all off. Hey, you know what? 40, 50 cent trade. I can't be grumbling about it. But I was looking for this push to get short on this sort of capitulation by the shorts and panic by the longs. 20 minutes into the film, I've run over already. Let's run through this very quickly. This was a bad trade for me, as I said in the blog. Short, oops, yes indeed. I thought that was the top because we poked over the 89. There's the 89 level there. I thought that was a flush, really good volume, and actually it was the biggest volume bar of the day, my consolation prize. But it's not about being right; it's about making money. And I was wrong in this case in terms of price action. Caught that peak beautifully, came back, didn't scale out on the 89. I really thought I got the top on that one, and I thought we were going to get a nice 40 cent move. A bit greedy, possibly, but took end up taking a stop on that as it drove straight back up. The important thing to note about this is that if you're taking an exhaustion trade, you must be so strict with your stops. Just imagine if you took an exhaustion trade here and you're wrong, you've got such a lot of pain to sit through if you're not sitting with stops, and that's just not what you want to be involved in. So I took a stop on that. It wasn't massive. It was, part of the course. So I'm then looking for the exhaustion again. I started thinking, hang on, I've been stopped out near the high on this, but we've got another push up. Great little double top here. Classical double top, and especially when you consider that only went something like 10 cents over the previous high. And the important thing is the shape of the candle. You've got that tail, you've got that wick, whatever you want to call it. Great, move back on. What we're talking about, the risk is quantified. We can afford to be top or bottom pickers when we've got the quantified risk. Volume's good, it all looks like a great flush, and it worked out quite nicely. Didn't make the same mistake twice on this one. Took a 20 cent scale, took a 30 cent scale, and I can't remember where, mate. I was just out with just before the 18. I think it was 89.10 actually. Looks better than it was. 89.10. That was a 40 cent scale. The last one, I sat through this for so long it felt like it was torture. But the reason it was torture, I just saw this bull flag forming and thought, oh man, I'm short during a bull flag. I'm waiting to get stopped out on this last position, even though it really didn't matter because I'd taken the meat out of the trade. Had a little resting order just under the 89. Got a fill on that. Looking back, I don't even know why I had it on the 89. If I was going to have it anywhere, I should have had it well under the 89, not just under. But hey, there you go. Obviously, I had some reason for that at the time. Can't see that why that was now. Better been just in front of it. So those are my all trades. Yeah, really good day, great volatility, great action. All about keeping that risk managed. You can tame the volatility by reducing the size. And if even if it's too much size, I know some people have got small accounts and one contract on oil. It's still $10 a move, and when they're moving 50, that's $500. And for some people who are starting out, they don't want to risk that amount, whether you have that or not. To understand that, so there's no shame, as I've said in the blog, in just standing aside when it's wild like this. It's seductive when you see the action when you're a beginner, or even if you're intermediate, or even if it's not your type of action, even if you prefer the slow methodical stuff. It is seductive to think you can make quick money in this and a lot of money, but equally there's a flip side to that. You can lose out a lot of money on these sort of days. So don't feel ashamed to stand aside. Definitely scale down the size of your positions and keep that risk managed, and don't be afraid to be wrong. It doesn't matter, it will keep you alive. I'm not frightened to taking stops. I'm pleased to take a stop because it will save my account. Occasionally you're going to get cracked at the top and you're going to get the low tick or high tick. I've shown videos where I've got it completely wrong, but it does not matter. We're on about, you can forget about it, move on to the next trade. The next trade can be great, the next trade after that can be great, and over time we'll make money, and we'll build the accounts up and make our living. So good trading, guys. It's a 25 minute long video. Shorter than my last one, but we had a lot of stuff to talk about. Great one for the archives. Any questions, any feedback, email me, mark@thedaytradingroom.com. Thanks for your comments, thanks for your feedback, and I may not be back with another video this week, possibly be the weekend. Very, very busy at the moment, but I may end up doing a couple of videos at the weekend just to log the week's action. So good trading, guys. Keep the risk managed, and I'll be back with another video shortly. Oh, before I go, I haven't forgotten about the tape reading video for the oil. I caught some of Friday's move, but it slows down my computer so much catching the time and sales on the dome. I'm not sure. I've just bought myself a little camcordery thing, so I'm going to try and see what the quality's like by having that just in front of the screen. That way it's not using any processing power, and that might be a great way of capturing some tape. Great for reviewing, great for people to learn from. You guys get some benefit from it. That's fantastic. Great for me to review my mistakes and look at how I've done stuff good. So I'm going to have a little play around that, but I'm going to wait for the volatility to dies down a little bit before I start fiddling around with stuff like that. But good trading, guys. Great month January. Let's look forward to a good month February.